Business Link Alberta acknowledges and respects that we are on traditional land, meeting grounds, territories, gathering places, and traveling routes of Treaty 4, 6, 7, 8, and 10, and the home to many First Nations, Métis, and Inuit people. In this period of reconciliation, we acknowledge the lands of those who have come before us, reside here now, and in the future. Welcome again to Tax Tips and Tricks every Canadian small business owner should know. Navigating Canada's tax system can feel complex, whether you're a sole proprietor, an incorporated professional, or running a growing small business. So this session is designed to break down key concepts in a practical, approachable way without any unnecessary jargon, so that you can avoid any costly mistakes and make more informed financial decisions. My name is Linda Posada. I'm the event specialist here at Business Link Alberta. If this is your first time joining us for a Business Link webinar, we are very happy to have you here today. Business Link Alberta is a government-funded nonprofit organization that supports small businesses across Alberta with free one-on-one advice, market research, training, resources, events, and webinars such as this one to entrepreneurs at any stage of their journey. I am really excited to introduce today's speaker, Vartika Satija, CPA, CA. Vartika is the founder and principal of Vartika Satija Professional Accountant, an independent accounting practice specializing in corporate tax compliance, tax planning, and advisory services for small and owner-managed businesses. She works closely with entrepreneurs, incorporated professionals, and non-profit organizations to deliver practical, strategic, and compliant tax solutions tailored to each client's needs. We're really happy to have you here with us today, Vartika. I will hand it over to you.
Thank you, Linda, for that great introduction, and welcome everybody. Thanks for giving this afternoon with all of us, with us in Business Link, and thank you, Business Link, to have me on board to present on this very important topic. As Linda mentioned, my name is Vartika Satija. I'm the principal and founder of Vartika Satija Professional Corporation here in Calgary. I do assist small to medium-sized business owners pretty much anywhere in Alberta, Ontario, BC as of now. And we do help with tax planning, tax compliance, and tax advisory services, as well as we do perform these kinds of educational seminars for small business owners. So I'm very, very happy to be here today advising you guys on some tax tip, what small business owners actually do need to know when they have a corporation or when they are starting a corporation, or even if they're starting as a sole proprietor. So let's move on. So I believe everybody can see my slides, right, Linda? Everyone is good? Perfect. Sounds good. So we have to understand the small business taxation, not just from a compliance point of view to the government, but also for your own strategic planning. It helps with the proactive tax strategy development in the corporation. And you also need to understand the basic tax principles and structures that is required in order to, for your corporation, whether as a sole proprietor or, as a corporated company, how you need to be compliant with the government. So that's why it's very important to understand the small business taxation, even if you're not making enough money yet, even if your business has not, commenced with, ongoing revenues and expenses yet. So it's still important to understand these compliances that is required with the government. All right, so before we jump in, we're going to talk about the tax structure of a corporation versus a sole proprietorship. So, a lot of small startup companies or, individual owners, they end up starting up a corporation. However, they're not an incorporated company. So they haven't gone and registered federally and provincially. They're just running it under their own name or a trade name. So there's a difference when we talk about a sole proprietorship and how the tax structure works for them versus a corporation. So let's say you're a sole proprietorship. All the income that you are getting is actually being reported onto your personal taxes along with a business schedule. So you are not a separate legal entity from your corporation. And then you get taxed on the personal, tax brackets, and then you get the final income after tax in your hands. That is like your take-home money. However, if you are a corporation, so let's say you did go and incorporate federally and provincially, and you registered as an incorporated company, now you become a separate legal entity from your corporation. So you as a business owner owns shares into your corporation, which means that, only corporate profits are distributed to the owners in the form of either a salary, a dividend, a management bonus, and then the individual owner ends up paying personal taxes on the money that they receive from the corporation in those forms of compensation. So that's the difference, in the tax structure of a sole proprietorship versus an incorporation. So as just to recap of the whole thing, as a sole proprietor, you're not a separate entity. You're not a separate existence from your entity. Whereas as an incorporation, you are now legally separated from your corporation. So that's the difference. Now, when a sole proprietorship, as we talked about it, all the taxes are, taxed at the personal tax level, tax rates. Whereas if you're a corporation, there's two levels of tax. Corporation ends up paying its own tax, which is usually lower. And then any money that has been distributed to the individual business owner gets taxed in their hands at the business as a personal tax grid levels. So you have to understand on the corporation side, there's always two levels of taxes that you're going to be taxed at. So moving on to the next slide. What are the tax differences? So let's just talk about the tax differences in the corporation versus sole proprietorship. Okay, so as we've talked about this, you are a separate legal entity when you become a corporation, incorporated business. So then the corporation has to file its own tax return, which is called a T2 return. And corporate tax rates apply, which is usually lower than the personal tax rates. And then the income that is distributed is usually distributed as salary or management bonus or a dividend. And then with a corporation, you do have limited liability protection, which means that because you're a separate legal entity from your corporation, you do, like if anything was to happen in your corporation, you are separated, like from a liability point of view, for your personal assets are separated from the corporate assets.
Nice.
Of course, we all know there's a more complex record keeping with, owning a corporation. We'll talk a little bit more in detail moving forward. Now, if you are a sole proprietor, we've talked about this, no legal separation between business and the owner. So you are, your own business. All the business income gets reported onto your personal taxes, along with all the business expenses as well. And then the personal tax rates apply. So we all know, we start off at, now it's 14%, then, go to 20.5%, then it goes to 26% federally. And these are all the different personal tax rates. So depending on where your income or the net income turns out to be, that's where you're going to be taxed. And then all the profits, all the net income profits that flow down to the owner directly. Now because you're not you're not separated from you're not a separate legal existence from the corporation. So there's no liability protection. So if anything was to happen within your corporation, the creditors can come against the assets of the individual business owner. However, since it's only reporting your income and all the expenses, there's a little bit simpler administration to do all your record keeping as a sole proprietor. Okay. And then corporations offer, I just want to bring this tip out because, when you have an incorporated business, there's no such thing as tax savings, but yes, it does offer some tax deferral opportunities. There's a potential income splitting opportunities. However, under the sole proprietorship, we can do a lot of those kind of tax planning under the sole proprietorship.
I see. Vartika, for anyone watching this webinar, even myself, I see the differences between a sole proprietorship and a corporation, and I will be inclined to just incorporate immediately. But from your point of view, would you recommend starting with a corporation rather than a sole proprietorship?
Yeah, that's a very good question, actually. So usually, we can only talk more from a tax point of view. And when we talk from a tax point of view, we say that it's best to incorporate a company from a sole proprietorship to a corporation when you can leave enough money in the corporation and you don't need to, extract all the profits for personal needs. Because that way we can do some good tax deferral strategies, within the corporation and not have to pay all personal tax on the money that you make in the corporation. So that's like your tipping point is like, okay, if I'm making 200,000 in my corporation, but I can live off of like 100,000 personally. That's all I need to live off of. Then I can leave the rest of the 100,000 in the corporation. Then there is an advantage for us to incorporate. But if I'm making, 100,000 and I'm extracting all that money for personal needs, then there's not much of an advantage. And in fact, there'll be additional costs because, to maintain your corporation, there's always these additional costs, professional fees, legal fees, things like that. So that's again, we only talk from a tax point of view. There's always legal, matters why some sole proprietors do need to go and incorporate just because of legal matters, or you want permits and it's only applicable under corporations, or grants are only given out to corporations, not to sole proprietorship. So in those situations, then we see where, even if you're not making enough money to leave it in the corporation, just to take advantage and just to have even limited protection, liability protection, then we see some individuals going and incorporating the sole proprietors.
Perfect. Thank you for sharing.
Okay, great. Thank you for that question. So, talking about the right tax return for your business. So, as a sole proprietor, as I mentioned, everything goes into your personal tax. However, along with your personal tax schedules, you will have an additional Form 2125, which is called the Statement of Business Activities. That statement of business activities reports all your business income, expenses, any capital cost, just like, you're holding a company's expenses. And then that includes, that all gets included as part of your personal tax return. So that net income gets added on to any other income. So let's say you have a T4 income, you have investment income, you have rental income. That does give this business income does get added to those other income as well, in order for us to determine what is the personal tax that will be applied on the total income. Now, if you are a incorporated business, you have to file a T2 return. Now, it's required for incorporated businesses to report corporate income. Now, in this, when you're doing a T2, we do require to create a balance sheet and an income statement and a retained earnings statement. So there is a complex financial statement requirements for the T2 return. Now, when we do the T2 return, it only accounts for all the income and expenses earned by the business. And that's probably where what the corporate tax rates get applied is to the net income. There is no other income, no other personal income that gets added on to the corporate income in order for us to determine the taxable income. So as I said, the T2 return is exclusively just for the corporation that reports, all the assets, liabilities of the corporation, the retained earnings of the corporation, and then has a separate income statement with the income and the expenses. There are going to be various other schedules depending on the business activity. So if you have investment incomes, then we always have like separate schedule for investment incomes. If you're paying out dividends to the shareholder, there are different schedules for that. So it depends on the business activities, what kind of various schedules goes onto the T2 return. We want to make sure it's separate from the personal taxes of the shareholder. Okay. GST, HST return. That applies to both sole proprietorships and incorporated businesses. So if you are a sole proprietor and you are also making, revenues over 30,000, there you have to register for the GST, HST account. Okay, and the filing frequency, which will go a little bit more in detail, will be based on the revenues of the corporation, whether you're a sole proprietor or you're a corporation. Will all depend on the revenues that they're making in the business. And again, this is a separate from the corporate income tax reporting and filing. So a GST, HST return is a separate tax return, like a GST return that gets filed. It does not go along with your T2 or a T1 return.
I see. Quick question about this, Vartika. So
Sure.
we're saying for sole proprietors,
Yeah.
when we talk about the amount. So for example, if I have a job, right, but I want to start a side hustle, would I still have to file the GST and HST if let's say I'm making more than $30,000 in my
You
corporate?
do. Yes. So even
Oh,
if it's a side hustle and your revenues have crossed the 30,000, yes, you have to still go and register for the GST HST account.
but this would be only for the business activities, or it would be also for my salary?
Oh, no, just the business, sorry. Just the
Okay,
sole
perfect.
proprietorship business, yes. So, okay, just to reiterate to the question, yes, no, it does not include your employment income, investment income, nothing of that sort. As a sole proprietor, it is exclusively based on the business income that you're going to make in the corporation. And
Perfect.
if that crosses the 30,000, then yes, you have to register for GST HST account. Okay,
Awesome. Thank you.
great. All right, so let's move on. Just talking about as a sole proprietorship, we don't get much of a choice. So the year-end date is always going to be the December 31st because it goes exactly along with our personal taxes and everybody files taxes from January to December, all the income that's made between January to December. And that's why sole proprietorships also need to account for all the revenues and expenses from January to December, and that's the year-end date we get. There's not much choice we get, but if you are a corporation, you can select any fiscal year-end date, considering your business cycles and the tax planning you want to do. So it doesn't have to be December year-end. It can be a March 31st year-end. It can be a February. It can be September. We always suggest clients to pick a year-end date that's not so busy for them in their business cycle. So, if you are a business that is super busy during the summer months, then summer months are not the good time for you to keep a year-end date. You probably want to pick a winter month, you want to pick a March 31st year-end date. You want to pick a April 30th year-end date. The reason we say that is because you need at least 3 months after the year-end date to be able to do all the tax planning, the tax compliance, make payments to the government. So you need to, set aside that time in the corporation to be able to, do all this tax compliance work. So you don't want to pick a year and date that is very busy. For some people, even December 31st can be a good time, but some people, it can be very busy because, when we all come back in January or February, it just gets very crazy busy. So if that's the way your corporation operates, then that's not the good time to pick your year end date. So you only get one chance to pick your year-end date. If you do want to change it in the future, you have to have a very valid reason to change it. You have to write letters to the government. You have to find, very appropriate reasons why you want to change it. And then you'll have to wait for approval. And that's why we say when you incorporate your business, pick a year-end date that is not a very busy time for your business because changing that year-end date can be a lot of work in the future.
Perfect. Important to keep in mind before you incorporate.
Exactly. Yes, and we always say, keep factors such as the cash flow patterns, the seasonal business fluctuations, and timings of the major expenses as one of those decisions to, pick an year-end date for your corporation.
Perfect.
Okay. All right. So let's go with a little bit more detail into your corporate filing requirements. Again, that's your T2 return that we need to file. So as I said, the year-end date, choosing the year-end date is very important because you need to make sure you're filing your tax year and taxes are being filed within the 6 months of that fiscal year end. Now, we're talking about filing the annual return, which is after the 6 months after the year end date. However, this is what confuses a lot of people. You have to make a payment within the 3 months of the fiscal year end. So let's say you are a December year end, you will
Mhm.
have 6 months to file with the government, but you may still have to do a tax estimate and make the payment by March 31st of the year after the year end. So a lot of people get confused with this. We always say go with a 3 month deadline in your head rather than the 6 months. Now, there are certain bigger corporations, where we have to wait till the year end is done. Then we have to do reconciliations after the year end. You need a month or two to do all your bank and your credit card statements don't show up the few days after the year ends, and then you start a reconciliation. Obviously, there are all these big corporations that will need time. However, we still do a tax estimate We don't do the entire filing. We do a tax estimate, and we send the money to the government within the 3 months of the year end date. And then we can take a good, 6 months to actually do the actual filing once we have finalized the entire tax return. Now, for a lot of small corporations, we do tell them, keep a 3 month deadline in your head. We don't want to exceed that. And then if you are making over $3,000, you are required to, make installments for next year. So installments are required for next year if your taxes owing in the year before was over 3,000. So as I want to emphasize on that point, the payment deadlines are always earlier than the filing deadlines. The balance that has to be paid within 3 months, and basically the filings can still be done within the 6 months.
Perfect.
Okay.
So key takeaway, try to file within those 3 months. Don't wait for the 6 months.
Yes, right. Unless you're a very big corporation that
True.
requires more additional time to do all your reconciliation, then we do based on tax estimates.
Perfect.
Okay, sole proprietorship filing requirements. As I mentioned, you do only, fill out a form T2125, which goes again with your T1 return. You categorize all the expenses according to the CRA guidelines. CRA, I have actually put a link in my future slides to show you what the CRA guidelines are for all the eligible business-related expenses. So only income and all the expenses, they go onto that business schedule. And, you, of course, will have to maintain all the supporting documents. Now, the filing deadline, again, we got to make sure we understand this. The filing deadline for anybody with self-employed employment income is June 15th. However, if you owe money to the government based on last year's, taxable income, the amount has to be paid by April 30th.
Okay.
Okay,
Similar
so
operation. Mm-hmm.
exactly. Yes. So April 30th is the payment deadline you have to keep in mind. However, you still have until June 15th to actually file the actual return. So what we do is we always say, okay, if you can file it by April 30th, you can do an estimate based on what's the revenue, what's the expenses, and then, just send some money to the government by the April 30th based on that net income. And then you take your time to make sure it's all clean and your business schedule is all done properly before we do all the filings.
Perfect.
Okay. Same requirement if you owe over $3,000, then your installments are required for next year's tax return. So you'll have to make quarterly installments if you owe over 3,000, because government doesn't want to wait till the next year to receive all the payment in once. They want to make sure you have paid some money over a period of time for next year's taxes.
It makes a lot of sense.
Yeah. So complete Form 2125 detailing all the revenues, eligible expenses, CCA claims, and then we'll talk a little bit more detail about those vehicle home office expenses that can be claimed. Okay. And then if you have spouses, again, that will also determine if you have self-employment income, but you have spouses as well, whether the June 15 deadline actually applies to them or not. Something you have to sit with the advisor to understand whether they need to file before or they can also file with you and as of June 15. All right, so GST HST requirement, as we've talked about it, it is mandatory if your revenues exceed 30,000 or in a calendar year or over 4 consecutive quarters. So that is there's no optional requirement there whether you're a sole proprietor or you are a corporation. However, if you are under 30,000, it's still optional. So if you didn't make about 30,000, it's an optional thing whether you want to be registered or not. Now, we tell people if you are a growing business that has expectation of profit in the future, we tell them to go and register from the day they incorporate. The reason is even though you haven't made enough money in order for you to collect GST, you haven't made 30,000, but the fact that eventually you will grow to that level, but all the GST you're paying on all the expenses can be recovered back from the government. And also, another thing we tell clients is that it's always beneficial to register because then you get your customers used to seeing a GST being charged on the services. So let's say, in the initial months, you probably did not charge them. And the minute you got 30,000, you went and registered and now you start charging them GST. For them, they see a higher invoice. So if you end up like registering, from the day you incorporate, you can start charging your clients. So they are used to seeing your services or your products plus the GST. Okay. So
So,
that's why we do advise them to
mhm.
register while, you start your business.
So basically, as soon as you start your business, you recommend that everyone registers for
That's
GST.
always
Perfect. So we did have a question here for Megan.
sure.
It relates to that. She mentions, do you have to charge clients GST, HST if you're making under 30,000? So basically, you don't have to, but you should.
Yeah, but before you charge them, you go ahead and register. You have to have the registration done with the government. Yes, if it's under 30,000, it's optional. And if it goes over 30,000, then it's mandatory. Okay.
Perfect.
But before you charge them, you have to be registered. Okay.
So,
And then your GST, HST, where you're providing services. So where's the place of supply of the business services or product is where you'll be charging them either HST or GST plus the provincial taxes. So for example, if you're providing services to a client in Ontario, even though you're in Alberta, but because the place of supply of services is Ontario, you have to charge them 13%, not just the 5%. So
mhm.
always important to see where you're providing those services, which province, and what the HST rates are for those provinces. But if you're providing it in Alberta, we only charge 5% GST to our clients here.
Noted.
And and some provinces, you also have to find out whether the services or the products that you're supplying actually applies for provincial sales tax. So you may have to register for a provincial sales tax separately in those provinces.
That's good to
Something
know.
to look with your advisor. Yes. Okay, so in previous years, we could actually just call CRA and do the registration, but now they're pushing for us to register through CRA My Business account. So any corporation that is opening up, registering, getting a CRA business number, the minute you get a CRA business number, the first thing you should do is to open up an online My CRA business account. And through that, you can register for a GST, HST account, payroll account, RZ, which is your T5 dividend income account through those My Business accounts.
Perfect.
And I also wanted to emphasize on the point that CRA is trying to move on to online mailing system and notification rather than sending out mails. So
Mhm.
they are, enforcing businesses to be registered under this online CRA My Business account. So, and then they've been sending all the notifications through online account. Only if you request for paper mail, they are actually sending paper mail. But for most cases, your notifications, everything is going to be provided online. So it's very important to register for this My CRA business account. And then when you do register for a GST HST account, you need to implement the system. What I mean by implementing, your invoices to your customers should actually have your GST HST number on those invoices. And then it should actually show what's your number and how much you're collecting. Because in case they are they are actually also applying for ITCs, input tax
Mhm.
credits, they can only do so if your GST and HST number is on the invoice.
Okay, that makes sense.
All right, so let's talk about some GST, HST filing and payment deadlines, okay? So as you can see, if you are your filing monthly period is on a monthly basis, which means you have to report every month, then you have 1 month after the period end date. So what that means is, for example, if you're filing for the month of July, you have until end of August to file and make a payment for that month of July.
Mhm.
Okay. If you are a quarterly reporting period, then you have 1 month after that quarter. So for example, if it is going from January to March 31st is your reporting period, the filing and payment deadline has to be made by April 30th. So 1 month after that quarter. And then if you are an annual reporting, like you can annually report and file, it's 3 months after the period end date. So if you, let's say your fiscal year is from September 1st to August 31st, the 12-month period, you have the 3 months after, which is up to November 30th to make a payment and file with the government for your GST, HST returns. Okay, now determine your filing frequency. So if your revenues are under 1.5 million, then you can, you can be an annual remitter, like you can be an annual filer and remitter. If your revenues are between 1.5 million and 6 millions, it's a mandatory requirement to be on a quarterly filing and reporting period. And if your revenues exceed 6 million, then you have to be, it's a mandatory requirement to be on a monthly filing and reporting period and remitting period. So, your filing frequency will depend on the revenues that your corporation is making. Okay. And usually for all the new registrants, it's typically annual filing, when you're under the 1.5 million, and then you have 3 months after the reporting period. Another thing we always recommend, like if you have an incorporation, like if you're incorporated company, we always recommend to have a GST, HST reporting period match up to your corporation's year-end, fiscal year-end date as well. So for example, if you are an August 31st year-end date for your corporation, we recommend to make your GST, HST reporting period also August 31st, just to keep the compliance simpler on your side. Okay. Maximizing on input tax credit. So since, as a company, you end up paying for GST on your expenses, you can actually claim that on the GST return against the GST you collected. So, as a company, if you end up paying for any business, expenses, you want to make sure, like, let's say you went to Staples and you purchased, office supplies, and there was 5% GST on the office supplies, but make sure those receipts actually mention the business number, the GST, HST number on the invoice or the receipt. And if that does, then you can claim that on your GST return as an ITC. It's called input tax credit. And some of the common eligible expenses can be your accounting fees, professional services, the utilities, rent, the telecommunication, supplies. Those are some, like, equipment that you purchase, any marketing material you purchase, and even subscription costs these days. So I know, like, international suppliers, like, supplying, products to us here in Canada, they may have to charge us GST, HST as well, even though they're international suppliers. But there was a new rule that they have to register for a GST account and actually, claim that from us as Canadian customers. So if you are, paying those international suppliers for those subscription costs, you can claim that on your GST return as a recoverable amount. It's called input tax credit. Again, if you missed claiming those ITCs on your GST, you have up to 4 years after eligibility to put it on a GST return. So let's say you missed this year, you have up to the next 4 years to actually claim that on your GST because you did make those eligible expenses. You did pay for those eligible. But be mindful that you have to be a GST registrant to be able to claim this. So if you did not become a registrant and you incurred all these expenses before, then you can't claim those. Okay, so be mindful of those. Now, there are some rules that do apply for capital assets, like if you bought some assets in the corporation, on how you can claim those ITCs for those corporations' capital assets. Now, when CRA does, examine those ITCs, they will not just take a credit card statement or a business statement. They want to see the digital copy of those receipts that actually indicates the GST, HST number on that receipt. So be mindful when you are getting receipts from your suppliers or contractors. They are mentioning and issuing those GST, HST number on those invoices.
Perfect. And these input tax credits apply to both sole proprietors and incorporated businesses?
Absolutely.
Perfect.
Exactly. It's for sole proprietorships and corporated business as far as your GST registrant.
Perfect.
Okay, so let's move on to the accounting methods for business income. So, what kind of accounting method you pick? There's always two. One is called the accrual method. The other one is cash method. And usually, whether you're a sole proprietor or you're a incorporated business, you have to most likely go for accrual method, accounting basis. Now, there are some exemption for certain industry kinds, but for most sole proprietors and most businesses, you have to go with this accrual method. What does the accrual method means? That revenue is recognized when it's earned, not when the payment is received. So let's say, you provided services for the month of December, but payment was not received until January. But the revenue should be recognized in the month of December, not in the month of January. That's what revenue recognition will be on your accounts, even though payments haven't been received. Same thing with expenses. Expenses are recorded when they're incurred, even though they're paid later. So let's say you received a bunch of inventory already, but payments haven't been made. But because you've received it or you've actually, incurred that expense, even though the payment hasn't gone through, you can record it in the period that you have actually received either the products or you have incurred that expense.
Perfect.
Okay, and again, as I mentioned, it is mandatory for corporation partnerships, most businesses with revenues exceeding 500,000 anyways.
Okay. Perfect.
And cash method is probably when, revenue is recognized when the payment is actually received. Expenses are recorded when they're actually paid. So it's not, when you've incurred, you've earned it, but it's more when you've actually made the payment. So that's the cash method. Now that method is only usually applied for farming operations, fishing businesses, or like the self-employed commission sales agents are approved of the cash method. But for most small to medium-sized businesses, sole proprietorships, they have to go with the accrual methods. Okay.
Perfect.
Now this is one slide I did put up just to show the commonly allowable business deductions. You can see anything that makes you earn business revenues. So anything that's directly related to the business are considered legitimate business expenses. So a lot of advertising, promotional expenses, digital marketing expenses, dues and subscriptions, memberships, licenses, insurances that you need, office expenses, professional legal fees, your startup costs, materials purchase, those are all considered legitimate business expenses. If you see, I've also put a link at the bottom, which actually takes you to canada.ca, like the government's website, to show you the actual list of all the expenses. Now, of course, there are more expenses because every business is different and they'll probably have different operating expenses. But these are most commonly, used business expenses that most businesses will see. Okay. So let's go into motor vehicle claims as a sole proprietor, right? And I specifically want to mention because the way you track your motor vehicle as a sole proprietorship is going to be different as to how you track it for your business, like, as a corporated business. So if you are using your personal vehicle for business purposes, you do have to maintain the mileage logbook, and it's very, very essential. I can't emphasize how important it is to
Mhm.
maintain a logbook showing your total kilometers and showing, business related kilometers and travels. Um, and the logbook is very much required, and the details that should go on your logbook should be the date, the starting point, and the ending point of the trip, and the business purpose of that trip. It is very, very important, in order for you to claim, to track this. And the reason I'm emphasizing on this is because we have had CRA audits, and the first thing they've asked is to provide a mileage logbook.
Mhm.
Okay. And then based on that logbook, you can claim pretty much all of these expenses in your sole proprietorship. So what happens is that the logbook will tell us what's the total, kilometers driven. Then it'll tell us what's the business kilometers driven, and it gives us a percentage. And based on that percentage, you can claim all of these expenses in your corporation, like all of these vehicle related expenses. So,
Mhm.
like your fuel, like the gasoline expenses, the license, registration fees, your repairs, your car washing, the professional detailing expenses. Now, if you
Mhm.
are leasing your vehicle, of course, they're subject to CRA limits, but some of those lease payments can also be, claimed based on the kilometers that are driven. And then if you own the vehicle, then we take CCA, which is the capital cost allowance on the vehicle. Okay. Very important, I like to mention is what is really considered a business travel. Going from your home to a principal place of business, which means your regular, like, office is not considered business kilometers. So going from home every day to your office will never be considered a business. But going from your office to meeting different clients, to go see your advisors, to go on a business conference, to, go buy supplies for for your company, those can be considered business kilometers. Okay, so always understand that. But going from home directly to the same location will not be considered a business kilometers.
Perfect.
Now, this method is only for sole proprietorships. That's how we do the tracking for sole proprietorships. However, if you are a corporation, you can actually get a reimbursement based on the mileage rate. Not, and again, I want to emphasize this is only for corporation. So the mileage rate for 2026 is based on the business kilometers that were driven in the corporation. You get 73 cents per the first 5,000 kilometers for business
Mhm.
purposes. And then everything after that is at a reduced rate of 67 cents per kilometer. So let's say you've maintained your mileage logbook and you say, you know what, it's 10,000 kilometers that were driven for business throughout the year. So the first 5,000 will be, you can get a reimbursement on 73 cents, and the rest of the 5,000 will be on the 67 cents. Again, you have to maintain the logbook, for you to ensure that you are able to prove that to the government that the law, like, all those kilometers were driven for business purposes only. Some of the tips I would like to give out here is you can track your mileage through all these apps that are out there, Mile IQ, Driver's Note, QuickBooks Mileage, or you can use anything other than that.
Thank you for that.
The next expense I like to mention is home office
Mhm.
deductions. Okay. So in order for us to claim our home office, it has, like, CRA has very, very strict rules regarding the eligibility criterias. So the first thing is that it has to be your principal place of business, or it is used exclusively for client meetings. So the fact that you have an office space somewhere where you're paying fair market value rent and you go there every single day does not make your home as a principal place of business. That office space becomes your principal place of business. So the fact that you get up and your actual office space is your home every single
Mhm.
day, then it makes it a principal place of business. Okay.
Mhm.
And then in certain situations, there are like psychologists or there are like, therapists and stuff who are exclusively seeing, clients at their home. Then it also makes it a principal place of business for them. How do you calculate? The calculation will always work based on the square footage that is used. So you'll probably take a square footage, the workspace square footage, divide that by the total home square footage, which gives you a percentage, and then you can apply that to all the eligible expenses, which I'll probably show you what the eligible expenses are. Now, the tax benefit is that it actually helps you reduce your taxable income on your tax return. But if you are in a loss position, you cannot use home office to reduce your loss. You can only bring it down to net income to zero, but you cannot use it for it to even bring down more loss in the corporation. Now, I also want to emphasize on the documentation required by CRA is to make sure you do keep proper footage and the photos of the floor mats of the office space that you're using to support your calculations. And then a lot of times I do want to mention that, let's say you say, oh, I've renovated my entire basement, for my office. But again, what is the space that is exclusively used for work? If you're only using like a desk space with a little bit of a storage space, that's all you can use. You can't really say my entire basement is office set up, unless you have it set up in such a way that you're actually getting, employees to come and work from a basement, or, your clients come and visit you from your basement, things like that. And these are all the eligible expenses that can be claimed under under your home office. For mortgage, be mindful, not the principal part, only the mortgage interest part is allowable expense. Okay, as I mentioned, you will divide that, you'll get the percentage based on the space that is used for home, and then you'll divide that with the percentage of the entire home's square footage to get the percentage and apply that against all of these expenses. Okay, we've already talked about it. Home office expense cannot create or increase business loss. It can only be reduced to bring your income down to zero, and then any excess can be carried forward for future tax years. Okay, and of course you want to be consistent in calculations and also have proper floor maps and measurements taken for the space you're using. The other one I always get is meals and entertainment expense. What can be claimed? So for whether you're a sole proprietor or you're a business owner, you can only claim up to 50% as a tax deductible for meals and entertainment, because from a CRA's point of view, there's always a business and personal element, and that's why they only let you claim 50% as business. Now, the standard rule I've talked about is 50% that is allowed. However, there are some exceptions where you can claim them 100% in your business. And exceptions are, let's say you hold, you're a big company with employees, and then you do, employee events where the entire company employees are invited to the company event. Then up to 6 events in a year are like meals that are purchased for that event. Up to 6 events a year, you can claim 100%. You can claim 100% if you are sponsoring a charity. So if it's for a charitable, benefit function and you're sponsoring the event, and the meals there, that can be claimed 100%. And then you can claim 100% if it's a meal that you're getting reimbursed from your client. So let's say you did go to a client's, office visit, and you ended up paying for your own meal. But then when you're, charging your client for that meal while you were working, then you can claim 100%. And then, of course, if you send employees to remote locations, approximately 30 kilometers, there's actually a map on CRA's website, what they consider remote. In those situations, you can claim 100%. But other than that, all meals and entertainment, even if you go to a conference, you went to a course and you had to pay for your own meals and entertainment. If you're traveling, you have to pay for your own meals and entertainment in the business. They're all 50% deductible only. All right, so record retention requirements for CRA, very important.
Mhm.
7 years is where you have to maintain all your tax returns and supporting documents. You're actually, sorry about that. I think it's supposed to be seven, not six, and the thing. So that will be 7 years. It has to be maintained for good 7 years. CRA has confirmed that electronic records, which are CRA readable, are considered reliable backup documentation. So if you're using some kind of a receipt tracking application, those are considered, reliable record, like backup record for CRA's purpose. And if you do dissolve your corporation, you're still required to keep all the information for at least up to 2 years after the dissolution is done for your corporation. So in the recent years, CRA has, mentioned that, having a paper and electronic documents, they both will be considered reliable, record for their purposes. All right. So, what are some of the most, commonly seen small business deduction audits that are happening in the last few years? So, some of the areas we are actually seeing audits that are happening is definitely meals and entertainment. They always want to make sure you're claiming legit meals and entertainment expenses in the corporation. They're looking at the receipts. They're looking at who the meeting was with. It has to be with a client meeting. It's not just for your own lunches and your own family dinners. It has to be make sure it is a receipt. You're mentioning which client you went out with. They're also seeing what time and day you're actually going out for those meals. So if it's like a weekend one, they will always ask you, right? Considering the industry you are in, are you really seeing clients and doing work on the weekends? So things
Mhm.
like that you want to be mindful of. Big thing I can emphasize, they have been since 2020 and 2021. They've been auditing a lot of vehicle auto allowance, and they need to see complete logbooks. They've been asking straight out for logbooks. Home office percentage, they've been asking for floor maps, and they've been asking for like a picture of their, the office areas. Any expenses like your phone, internet that is somewhat business and somewhat personal, they've been asking for proof of that. They've all been asking for the subcontractor versus employee classification issues. Like, so if you're hiring subcontractors, are they really subcontractors or they're more classified as employees? So those ones are, if you're giving out big management fees without any kind of documentation, those are also being, asked for. This is a very important one, shareholder repayments and timings. So we've been seeing a lot of inquiries coming through for any of those shareholder payments going from corporation to the shareholders and the
Mhm.
shareholders repaying that and the timing. So we've been seeing a lot of inquiries and questions coming from CRA to prove those payments in and out from the corporation. Travel expenses. They've been asking, if you're claiming travel expenses to provide in detail how that travel expense was directly related to the business and how that travel actually ended up generating future profits for the corporation. So we've been also seeing some audits around there. Another thing I want to bring up is CRA's new digital economy compliance focus. So CRA has been, they've actually gotten more audit powers to now reach out to the online platforms like Uber, DoorDash, Etsy, Amazon to let them know who are those individual owners, doing businesses through these platforms. So they're able to get a report from these platforms on how much money is being sent out to the business owner so they can report onto their personal taxes. They've been requiring a lot of the people providing digital services and also a lot of international suppliers, who now have to be compliant. Like they have to go and register for GST, HST accounts, and they've been doing a lot more audits and reviews around that. Social media businesses and influencers. So they're actually looking out for all the social media influencers and reaching out to them and making sure they are also being compliant as a business. They've
Mhm.
been sending out a lot of letters if they see any kind of social media, presence. So that kind of audit work is also being done in the back end. Non-resident companies selling digital services, as I mentioned, if you're non-resident companies and you're selling services to Canadians, you have to go register for the GST HST account and charge the Canadian customers those accounts. So they're doing a lot of compliance work around there. And crypto and online income is we are also seeing increased activities with crypto, income generation work. Like if people and companies are doing work around crypto, and they're because there's a lot of there's not a lot of statements that can be provided, but CRA has started to do some compliance work there to make sure people are recording their income with all the cryptocurrencies that they're making.
Perfect.
And then last thing I like to mention is that in the last year, we have been seeing a lot of expand with audit powers. So, before CRA could only demand for tax returns or just records, but now they can even go beyond just the tax returns. They can ask for bank statements. They can actually reach out to the third parties and related parties. So they can actually go to your advisors and other agencies to provide those kind of statements. So they've also been requiring oral interviews. So not just written or it's going through a letter or letter to respond. They can also come to your client, they can come to your business office space and do interviews in purpose. So these are some expanded audit powers. They're also, they may also require to answer under oath. So, they may, if they want to, get more validity on the information, they can probably ask you to validate under the oath. They're also implementing stronger enforcement measures. They can also take it to the federal court by providing those compliance orders. So if they are reaching out to business owners who are not responding, they can actually go to the federal court for compliance. And they can also offer, if you're not complying, so, if they are sending letters, they're asking you to file your returns, or they're asking, individual business owners to be compliant, or they're asking business individual owners to, send any supporting documentation. And if they are not responding, if the owners are not responding, then they can actually formally, give out a notice of non-compliance. And if you are giving out a notice of non-compliance, then daily penalties are also being accrued on those amounts that are outstanding. So just these are very recent audit powers that CRA now actually, can go above and beyond than just sending letters, to business owners if they're not responding. So just be mindful that if you do receive a letter from the CRA asking to, provide any information, any backup information, do call them, do respond right away. And if you are working with an advisor, do make sure you ask for extensions as well. So that completes, I think I took a whole hour here, but I will stay a little bit longer to answer any questions, but I just wanted to make sure I cover majority of the aspects here, as we wanted to go.
Absolutely.
But thank you so much for listening. I know there was a lot of information there.
But it's very important and valuable information, especially if you haven't even started your business, because having this clarity beforehand, it is so important, right? So that, like I said earlier in the session, we avoid these very costly mistakes, because in the digital era, and as you can see, this area now has more auditing power. So we want to avoid that, right? So thank you so much,
Perfect.
Vartika, for all of the information you shared today. Before we move into the Q&A part of this webinar, I just want to quickly go back to the poll that we had today. So, Vartika, if I don't make a profit, I don't have to file taxes. True or false?
Oh, absolutely false. The minute you have commenced a business, no matter what, you have to inform the government, and you have to be compliant. Yes. I
Okay.
hope everybody got false on that.
Me too. I hope so.
Yes.
Awesome. With that being said, we're going to move on to the Q&A session of today's webinar. And since we have limited time today, we'll focus on questions that apply broadly to the group so that everyone can benefit from the discussion. I am also seeing many questions that are very specific to individual business situations. And because tax guidance depends heavily on personal circumstances, those are often best addressed in a one-on-one conversation with a tax professional, such as Vartika. So thank you all for the amazing questions. And yeah, let's see the questions that we have here in the Q&A. But before that, I'm just going to drop here in the chat. Awesome.
Sure.
So, first question here from Megan. What if your clients are from all over the world?
Sorry,
I
can you?
believe this is regarding the GST, HST.
Mhm. Yeah, no, that's a good question. So, if you have customers outside of Canada, as of now, we are not required to charge them or collect GST, HST from them. It's only for most of our clients, majority of our clients here in Canada that we need to collect based on where we're providing services to, which province we're providing services to.
Perfect. From Isabella. When is a good year date, in your opinion? Does the start date of the company matter in this case?
What's a good year date for
Uh,
year?
the
I wonder if you're
yes,
talking about a year-end date.
yes, year-end date.
Yeah. So let's say you went ahead and you incorporated a company in October. You have between October and next year's end of September to pick a year-end date. So we always say, pick a year-end date that is a slow period for you as a business. So if you ended up incorporating in October and you think, February or March is a slow month, I would say go ahead with end of February or end of March as your year-end date. That's probably how I would suggest. Again, this is only for companies that are incorporated, not for a sole proprietorship.
Perfect. And we covered this earlier on the session, but we have a question here from Dami. Do you also advise sole proprietors to register for GST immediately?
Yeah, I do. I always advise them if they are an expectation of profit, like, expectation of revenues to go up 30,000. I always do, because your customers are also used to seeing GST collected on your services and you can recover all those ITCs on expenses you're making.
Perfect. And this is a good question. How do you get your business number for your CRA business account?
Yeah, so when you register, a lot of times I've noticed the registry would actually get a CRA business number, but if they don't, then you can call CRA, send them the incorporation document, and then you get your business number from there.
Perfect. Awesome.
And I just
Let's
wanted to make sure business numbers are only applicable if you're an incorporated business, but sole proprietorships, they don't get that business number. They only get that a separate one for the GST. So the GST will have a BS business number, or their payroll account will have a business number, but their sole proprietorship will not have a business number.
perfect. Thank you for that. For consultants, which has the better tax benefit, sole proprietor or incorporated?
It all depends, as I mentioned, right? We can talk
Mhm.
about from a tax point of view, and we always talk about, you also want to be careful if you're a consultant and you're only providing services to one customer, then you might be under the personal service business issue. But if you are
Mhm.
a consultant who has multiple, customers, you have multiple sources of revenue, then you can probably come out of that personal service business. Again, we always say, whether you're going to leave enough money in the corporation
Mhm.
versus you're going to use that all personally from a tax point of view.
Awesome. And rather than a question here, well, I do have a comment from an anonymous attendee. Can you share any bookkeeping basics, best practices, and that a business should follow? I guess this is good content for maybe a webinar in
Future.
the future.
Yeah, absolutely.
Right.
We always recommend to, like, use accounting software like QuickBooks Online or Xero, Zoho, to start doing all your tracking. Now they're implementing a lot of AI systems, of course, to be able to do a lot of the tracking there. We always recommend, people should get onto those software rather than using Excel or, tracking it manually, just to, take the administration piece out.
Perfect. Are you taking any new clients?
Yeah, you can definitely reach out. We can talk about it, and we have complimentary 30 minutes meet and greet to determine, what kind of services you're requiring, and then based on that, we can chat further. Yes.
Amazing. Well, I wish we had another hour because clearly taxes are top of mind for many entrepreneurs today. Unfortunately, we won't be able to get through every question live, but the good news is that many of these questions are excellent follow-ups for a direct conversation with Vartika. So I already shared her contact info in the chat, and we will make sure to share that in the follow-up email alongside the recording. So keep an eye out for that. And thank you, Vartika, so much for all of the information that you shared with us
Thank
today.
you. Thank you for having me on board, and I hope that was a lot of valuable information for everybody. I'm happy to take any feedbacks. Please feel free to reach out to Linda or myself directly, and I'm happy to, take any feedbacks on this presentation. Anything that is a pressing issue, please reach out. As I said, you can always book 30 minutes complimentary with me. You can go onto my website.
Perfect. And before we go, I do have a couple of notes. If today's session raised any questions or sparked any ideas, you can also book a free one-on-one session with a business link strategist at businesslink.ca/book a meeting or by scanning the QR code on screen. And before we wrap up, I also want to quickly share an upcoming in-person event that may be especially valuable for those of you who are newer to entrepreneurship in Canada. So on March 19th, we're hosting our Newcomer Entrepreneur Forum or Entrepreneur Forum for Newcomers in Alberta at the Edmonton Convention Center. It is a full-day forum designed to support newcomers who are exploring entrepreneurship, self-employment, or small business ownership. The day will include practical learning sessions, a resource fair, and structured networking, and even a complimentary lunch and refreshments. We will be covering things like business basics for newcomers, funding and grants, AI basics and digital marketing, and you will have the chance to connect directly with organizations that support entrepreneurs across Alberta. The tickets are just $10, and we're also running an early bird giveaway right now. So if you're interested, I can drop the registration link in the chat, or you can feel free to scan the QR code on screen. We would love to see you there. Awesome. And with that being said, I hope that everyone has a wonderful rest of your day. And thank you once again, Vartika. I appreciate it.
Thank you. Thank you for having me on board.